Welcome everyone that's watching right now. I'm Caro from Sell to Rent, and we have Leo, our seller manager. Today, we are going to talk about medical debt. Now, and I push for you guys to look it up in Google, the Kaiser Family Foundation says that over 41% of Americans have medical debt. This means that around 72 million people are affected by it, unfortunately. It's a very huge and unsettling number. Now, there are recent studies like the Journal of American Medical Association that shows that medical debt is a leading cause of house instability. Unfortunately, when those bills pile up, they create a debt to income trap, and this makes traditional refinancing almost impossible. This is why we have Leo here. He's our expert. Welcome, Leo. We're very happy to have you here.
Thank you so much, Gato. I'm extremely happy to be here. I'm super passionate about this specific subject, even though it's under the umbrella of the sell to rent and lease back. I think that this specific segment hits home for me. I'm super health conscious, so I think that this is tied in. And a super important thing to really unpack and be able to talk folks through and explain that they do have options with us. So I really appreciate you guys having me on, and hopefully we can educate people and really get them to understand the program and that they have options. At the end of the day, I want them to walk away knowing that you have options.
That is true. People are a priority, especially in this sector, among other topics. Now, before we begin, we would like to explain a little bit of what we do in Sell to Rent. Basically, we connect you, the homeowner, with investors and offer the leaseback program. This means that, hey, you know what? I need cash very quickly. So I sell my home, but I stay as a renter. So basically, you don't have to worry about any cost about moving or leaving your neighbors or school behind. You would stay home as a renter and be able to pay off your debt.
Absolutely. I couldn't have said it any better, Caro. So I think just to piggyback off of that, it's exactly what it is. The program is super kind of user friendly program where we match it to the best type of investor for your current situation. We dive deep into what's going on with you. If it's a debt, if it's medically related, we really like to understand the backstory so that we can help match you to the best type of investor for your situation. So it's a people kind of looking you in the eyes and really understanding your position and your desired outcome and goals. And based on that, we really tailor the approach to you guys. So it's a fantastic program. As you mentioned, if you're looking for cash quickly, it is something that gives you the ability to access the equity that you have in your home in a really really quick fashion in comparison to the like conventional sell, which could be 3 4 months if it sells at all. So it's a great opportunity for you folks to be able to access that cash.
Okay, so we do have a couple of questions for you today to talk about medical debt and how homeowners with our program can, go through this, reach their financial goals, and have any stability back into their lives. So,
Absolutely.
as we've seen, medical debt is unfortunately at a record high this month. Why do you think we're seeing so many homeowners struggle with getting any loans from traditional banks to pay off their debt despite having equity in their homes?
I think that's a fantastic question, and I think we'll touch on this a little bit more in depth. But I think banks, lenders, financial institutions use what I would think is a kind of outdated model where their main point of entry is looking at your debt to income ratio. So when they look at a medical bill, and sometimes we're in the States, medical bills could be outrageous, right? 30, 50, 100K. I've seen it as much as 300, 400,000. So when they see that, not only do they have that number, that huge number staring back at them, there is an unspoken fear from lenders and financial institutions that they know this is a medical debt that arose from medical emergency. What does that say about the client? What could potentially happen to this client health related in sometime down the road? So even though it's unspoken because it's a prejudice that you can't put on paper or talk about because it's actually illegal for them to turn you down for a medical reason, they do in their back of their minds and in the way they approve loans. they do keep this in mind. So I think that that's a big factor that, although it's unspoken, is well known in the banking and financial institution industry. So I think that that's one of the main reasons why homeowners with medical debt, especially, are seeing such a pushback and such friction when they try to go to their banks or to and get a loan. I think that that stems from that big factor. So that's a fantastic question, and it's a question that we get often. So I appreciate that.
Yeah. So let's say we have a homeowner that has a huge medical bill that they need to pay off. And as we know, usually this affects the credit score of that homeowner. How does the sale leaseback program allow them to move forward, especially by saving or making their credit score a bit better?
Also, a great question, and also what I think is an archaic measure of the credit score. Like, we're slaves to our credit score here. So I think that when traditional lenders, actually see the medical debt, they see that the credit score may have taken a hit through no fault of our own, because we got into some medical emergencies or issues that maybe we fell behind on payments, and that quickly could develop into us being reflected in a credit score that doesn't really take into account our backstory and what we can do and what we're looking to do. So I think that with us, because it's not a traditional sale, we're usually not really relying on their financial metrics. We're really looking at the untapped potential of your home, of your home's kind of finances and your home's equity. So that's mainly what we're looking at, right? We're looking at what kind of equity do you have in the home? How quickly can we access that based on your situation? So I think that this is a way to circumvent and to really get around the usual hurdles that you have to go through with conventional sales and conventional financial institutions. So I think this is a really great way for you to streamline the process.
Okay, yeah, amazing. You mentioned earlier the debt to income ratio. Can you explain that a bit more? How does having a 50K or 80K medical debt stop often a bank from approving a refinance loan? And how do we get involved and solve that problem?
Absolutely. I think that we lightly touched on that on the first point, but I think we'll go into a little bit more depth and kind of, really parse it out and be able to get the definition out. In the simplest form, it's a key financial metric that lenders, financial institutions use to see what percentage of your monthly income is going towards debt, right? And thereby, they kind of gauge your ability to repay borrowed money. That's kind of, your Merriam-Webster's kind of definition of it. That's what it is. I also think it's rather archaic because it's just one single point, one data point. They're not really taking into account what's going on in your life. So I think it's archaic. And also, you add on to that a credit score that's perhaps not polished and it's not in the seven, 800s, and you're in the lower end of that spectrum. And it just creates, as you mentioned earlier, a debt to income trap where you're just not able to get out from there. So I think that that is something to really keep in mind when you are facing debt because of whatever issue. In this case, we're focusing on medical issues, but for whatever reason you're in the position you're in, once again, I want you to take away that there is a solution, there is a way out, and perhaps it's not through the conventional channels. We could help you get out from under debt and be able to get you back on your feet and get some stability back into your life.
Yeah, I couldn't have explained it better myself. Now, when people hear I need to sell my house or you should sell your house, their first response is, "Hey, I don't want to move. I want it to be my last resort." How can the sale leaseback ensure the family stays in the neighborhood? Does it always have to be a sale leaseback?
So I think that that's a fantastic point, and that is one of our main tenants. One of our kind of real highlights here is that you get to pull out the equity, so you get to cash out on your home, but you don't have to move a finger. You don't lift the box, you don't call the movers, you don't look for another place. You do not disrupt your family's life. I have so many clients with kids that are ninth, 10th grade, and they tell me, Leo, I really want them to graduate with their friends, the same high school. They've been here since elementary school. I want them to graduate. So we give them that ability to be able to stay in the home for an extended period of time, a year, 2 years, 3 years, for them to really kind of line up the ducks in a row. And stability brings clarity. Brings clarity of purpose and knowing that you have a clear path forward. That comes from having stability in your life. That's what we bring back into your life, stability. It can feel so overwhelming. So, not only are you in debt, but now you have to sell your home and you have to move in 30 days and you have kids and you have this entire routine that you've built for the past 5, 10, 20 years that you've been in this home. And now you have to disrupt that, at the drop of a hat. We have a different solution. We have a different path forward that can really help you gain stability and gain clarity so that you know how to move forward in a year, 2, 3 years down the road.
Amazing. And this doesn't only apply to people with families. We've had a lot of cases where it's grown people, grown ups, that they just don't want to leave their house because it's been their family home for a very long time or have a lot of memories tied to it. And we've helped them stay there as well.
100%, Caro.
So, so going back to medical debt, we know that providers and collectors usually don't like to wait. Everything is with a timeline. You have to pay things up to date. Otherwise, everything gets very complicated very quickly. Based on that, how fast can the sell to rent team move on from the initial application until getting that debt paid off?
That's a great question, and I think it's a source of stress and friction for a lot of my clients. So it's like, man, I have people calling me every day. It's another collection agency. It's people knocking on my door. This is another part which adds so much stress to the homeowner, to the seller. Now, I think that with our the way we do things, the way we're able to really streamline the process, we don't have to do your conventional staging of the home, the open houses on Sunday. We don't have to go through the conventional loans. So I've seen it as fast, Cado, and I'm not exaggerating, even though I do like to use hyperbole. This thing could go as quickly as 30 days after we assign the buyer. So after we assign the buyer, we do a couple of things on the back end. We do an inspection of the home. We get a couple of kind of housekeeping things done. After that, I've seen it as quickly as 30 days. So it could be a really, really fast option. It's one of those break in case of emergency options that can give you access to your equity in a way that no other option can.
Yeah, that's amazing. So, you guys, as you can hear, if you need to get cash very quickly, we can help you around the month. It's an amazing solution. Now, another thing we do offer is prepaid rent and, having a lease period. How does this concept also help the homeowner with their other payments they have to do, like mortgage, insurance, among those monthly budget things?
I think it just simplifies the entire process because when I have to pay my mortgage here, I have the bills here, I have the interest, the taxes, you have 4 or 5 different due dates, you have 4 or 5 different payment platforms. So I think that it just simplifies because now you're just becoming a renter. So now you just have to worry about the monthly rent. And I think that something I want to kind of harken back to is the prepaid rent. Usually what we like to do, not just for the sake of the seller but the sake of the investor as well, to make everything just a little bit more seamless, is to have some prepaid rent that we take from the equity that's going to the seller. That, once again, I think that the main goal here is to give you a little bit of peace of mind, a little bit of stability, where we say, Cado, we're going to prepay the first 6 months. You don't have to worry about rent for the next 6 months, so that you can really focus on the next steps to take. So I think it simplifies, and a simple life is a happy life. So I think that that's one of the main goals here and one of the main highlights as well, Karu.
Yeah, amazing. Now, I do recall that one of the main questions we get is, my house isn't completely turnkey, it's a little bit of a fixer upper. In this case, once you sell your home, who takes care of the home maintenance? It can be a huge headache, and In this case, what happens there?
Think that's such a great question, and it's often overlooked. Where it's like, hey, Leo, I'm seeing that my home on the open market may go for a little bit more. I'm getting realtors tell me that they could sell it for X or Y or Z, and I always tell them, hey, I know that your home in a situation like you just kind of brought out is that your home is not turnkey, your home is not market ready, right? You have to get the curb appeal, you have to get the fresh coat of paint. If the roof is over 10 years old, you have to maybe fix, change the roof, HVAC system. There's so many things. It's such a heavy burden now to be a homeowner, where you have to keep up with all of the repairs in the home. With this option, my investors are buying as is. That's why we take into account the condition of the home. That's why we do an inspection of the property. My investors know that they're buying the home as is. So once the investor purchases the home, they now officially become the landlord. They're the ones that are, keeping up with the yard, they're keeping up with the repairs. So now it's a more conventional, you're the renter, they're the landlord, and you don't have to worry about it. Again, this all comes back to the source of what we're looking to give you: peace of mind and stability.
Yeah, I agree. Now, there's a lot of other solutions out there. Why is the sale leaseback a more stable and long-term financial solution compared to getting a high interest loan to pay off your debt?
Oh, don't get me started there, Kato. I think that from a person that's been in debt before with credit cards, it is one of those solutions that in the short term is, it does the job in the short term, but it is one of those very short-sighted solutions where you're borrowing from Peter to pay Paul, but this new debt that you just acquire has a much higher interest rate, which can quickly go into like a snowball effect, where now you don't owe the 10 grand that you owed a few months ago. Now you owe 18 with a crazy interest rate that's just going to eat you up on a monthly basis. So it is a very short-sighted solution as opposed to going for something long-term like this, where you're pulling out the equity, the cash from the property so that you can get back, hit that financial reset button, and actually be debt-free. And again, I hate to bring my own personal experience into it, but having been in debt, in quite a bit of debt, and now being debt free, you feel 1,000 pounds lighter. You're a different person. You're able to move with more confidence into your decisions. I'm telling you from personal experience, becoming debt free has been one of the greatest things for my life. So I definitely want my clients, want the sellers that are watching this to consider that. Don't go for the high interest personal loans, the quick loans, the payday loans. The interest are they should be illegal. They are criminal interest. So this is a much more long term solution that's going to truly bring peace into your life.
And we love that. Many people, I believe, especially with the situation nationwide, need to hear that. Now, what would you say to a person that is like, hey, I get what Seltzorin does, I get your solution, but I don't want my neighbors to know what I'm going through. Medical debt or any kind of debt is a very sensitive subject, and I want it to be a secret. How can you help them through that process?
As you should. I think privacy, again, I'll say it with many concepts, but private life is a happy life. I think that you should keep your concerns and your affairs private. And I think that as opposed to a conventional sale where you have the for sale sign on the yard with the balloons and you have the cars parked on Sundays to the open houses, with us, we have none of that. I will have an inspection. We'll have maybe some buyers do walkthroughs one at a time. It is such a discreet process that nobody will notice. So I think that that is an important part. But that's such a nuance kind of thing that a lot of people don't talk about. This is very discreet. So I think that that's also an added benefit, even though it's, let's call it a secondary benefit. It is something that will also give you peace of mind. Let's keep it quiet. Let's keep it between us, and let's do it fast, and let's do it seamless. So yeah, that's definitely our motto.
Yeah, that's great. I mean, no for sale signs, no open houses. We just go ahead and fix everything for you.
There it is.
So, another question I've been getting is I saw my house It's been a couple of years and I got back in my feet. Is there any way we can buy it back? Is it a permanent sale? Does it depend on the situation? How does this contract usually look like?
So within our ecosystem, I mean, the short answer to that is no, this is a permanent sell, right? That is the short answer. Even though it's more nuanced than that, within our ecosystem, we do not do buybacks, right? Even though there's a caveat there. I've had some investors that have purchased homes and a couple of years down the road, they may have some deal with the seller, but that happens outside of the sell to rent ecosystem. So in a very short, concise answer is no, we do not have any buybacks within this ecosystem. So that is a really important thing to bring up. It is going to be in the agreement. It is something that we clearly stipulate because we want that to be completely clear to the seller. So that is an important point, and it's something that a lot of people see as a downfall or as a downside to it. But it's something that I always tell my clients that, hey, look, a house is a house. It is you who makes it a home. So wherever you go next, by us bringing this peace into your life, this stability into your life, and once you are back on your feet, wherever you go next, that is your home. It is us that make those houses into homes. So don't get too attached to the brick and mortar house. You are the home. So I think that's something to keep in mind. But that's a great question, Kyle. Thank you.
Yeah, I agree. As someone that has moved around a lot, I've got that experience. You know, you make the house your home, and it's also much less stress-free to live as a renter than a homeowner. So that's a huge plus.
100%, Kyle.
Um, we got a question on our chat. What's the main difference between a sale leaseback and a reverse mortgage? Is one safer for seniors or people facing medical debt than the other?
I think that with the sell leaseback, since it is not a conventional, let's say, channel, which we're usually not taking into account the same financial metrics, which we already spoken about, like what's your debt to income ratio, what is your credit score, which a reverse mortgage usually does. And, I have tons of my clients that actually get turned down for those reverse mortgages and those interest rates. If you purchase your home, 15, 20, 30 years ago, and you had one interest rate at 2.9 or 3.5, that reverse mortgage, now they're going to take into account the kind of credit, or rather the kind of interest rates that we have, available now. This 5.9s, the 6.5s. So I think that this is a much better solution, especially I think that the client was mentioning seniors or older people. It is a much more friendly option to those folks. So I think that this is again a lot more long term, a lot more of a permanent solution. So thank you to the client that threw in that question.
Yeah, thank you so much, guys. If you have any more questions, please drop them in the chat. We'll see it and answer it right away.
Absolutely.
So, what type of homeowners do you usually work with? Is it people that have 100% their house paid off, or how much of their mortgage do they usually have paid off?
So I think that we see him from across the spectrum. So we work with everyone, every demographic, every person you can think of. So this is a microcosm of the United States. So you get them from all over the place. So you get them from every single background. So we work with everyone. As far as the equity, how much do they have to have, or do they have to have the home completely paid off? Absolutely not. 99% of the people we talk to do not have their house completely paid off. I don't have my house completely paid off either, right? So that's going to be few and far in between, the people that actually come to us with a completely paid off home. Most of the time we do want to kind of double check the equity to make sure that they have enough equity, to be able to accomplish the goals that they have. So that is a great question. We do take a look at the equity that you folks have in the property as of this moment. So that is a great question, but no, definitely not. Don't let that stop you from reaching out. If you are still paying your home, that's 99% of our clients.
Great. Before we move on to looking into the equity review process, we got another question. There are a lot of companies offering quick cash for homes. What are the top two red flags that a debt relief or leaseback program might be a scam?
So that's a fantastic question, and I have a litany of red flags that I would really kind of urge you guys to look into. Usually, one of the ones that I've seen a lot is a lack of paperwork. So there's a few things, and I'll go into several and touch on a few, but I think that you want to take a look at the company. You want to take a look at what kind of online presence do they have. Better Business Bureau? Do they have Google reviews? Do they have a website? So you do want to try and gauge how reputable this person or company is. What kind of digital footprint do they have? Also, written agreements, contracts. I think from because I've spoken to unfortunately a few clients that have been scammed at a large amounts of money, or at the very least, they've been just time wasted left and right. You want to make sure things are in writing. You know, our conversations are recorded. When we talk, I tell you exactly what we're going to do. I tell you that everything's going to be in a contract. I send that to you so that you guys could read it. We urge you to look for, legal counseling. So this is a big red flag. It's usually I see a lack of contracts, agreements, and things in writing. So I definitely think that that's one of the things you guys want to look out for. Make sure everything is in writing.
Absolutely. And transparency is key. One of the things that we make sure,
Mm,
apart from the documents, is constant communication. As a homeowner working with us, you would know what is going on with your home at all times. You could freely ask any questions or updates, and we would be there to respond.
Absolutely, Kato. I mean, it takes a village, right? So it's not when you speak to me, when you call in and you're speaking to Leo and I'm walking you through your options, it's not just a one-man band here. It's going to be a transaction coordinator, it's going to be an investor advisor. You're going to have just a village backing you up and at your beck and call. Anything you need, if I don't have the answer, one of my guys at the company will have the answer. So I think that that's also a great point. Make sure that you're being backed up by a team, not just some sleek talking person on the phone.
Great. Let's go back to the equity review process. We already talked about if someone needs to have their home completely paid off. Now, let's say you're someone that has, medical bills stacking up every day. How does this equity review process look like with our team? Where is the starting point?
The starting point is, let's say you and me get on a call. We'll talk about how much you currently owe on the mortgage, what other sort of liens or loans you may have on the mortgage, and we'll quickly kind of you know stack that up against the value of the home in the current market, and we'll see. This is again maybe in a nutshell and I'm oversimplifying the process, but it really is just you giving me a call and me walking you through how much do you owe on the property, what kind of loans, liens you may have, taxes, what have you, seeing the value of the home. And it's a quick calculation to say, hey, Kato, you have 100 plus thousand in equity, or X amount, Y amount. So it's a really simple process. We'll go through several different questions just to gauge how much debt you have and then how much equity is in the home. So that's pretty much it.
Amazing. It's a very simple and quickly process. I don't see any more questions, so I think we can start wrapping this up. Thank you all for watching this live. We will do this monthly, so please follow us, and we'll send you a campaign or post when the next live will be up. As you know, medical debt does not mean you are at a loss. You don't have to lose your home. There are a lot of many solutions, including a sale leaseback program with us. It's a massive issue, and we can help you guys accomplish this solution. And it's a one more step to financial recovery. So you can look us up, www.selltorrent.com. You can call Leo. You can call the 1-800 number that's up in this live. And let's see how your home equity is to start this process. Thank you all for watching, and we'll see you next month.
Thank you so much, guys. Take care.